Okay, excellent. So it seems like we're live. Welcome, everyone. Very excited for another round of valuable insights shared today. We'll be discussing value creation strategies, the defense against economic crisis. I will be joining a bit as well, but we're very excited to have Constellation sponsoring and have Reiner, the managing partner of Constellation, joining here with us today. A bit on Constellation. Since its beginnings in 1992, Constellation operates at eye level with entrepreneurs, founders, and management. They encourage owners to continue running their businesses with their comprehensive support. The 3 squares of their logo stands for the 3 essential pillars that every successful business must embrace: strategy, finance, and Constellation pursues a buy and build strategy focused on digitalization and succession solutions in highly fragmented, small cap, asset-light segments of the DACH region. They target niche markets in the following sectors: business services, education, lifestyle, financial services, and healthcare. Constellation adopts an innovative deal origination strategy across a large network of intermediaries, industry partners, entrepreneurs, and residents. Their proprietary sourcing strategy encompasses both a unique bottom-up and top-down assessment, including proprietary databases. And they generate value in their portfolio firms by focusing on operational improvements through digital transformations, which allows them to achieve substantial improvements in both top and bottom line. Very excited to have the founder and managing partner of Constellation with us today, and I'll introduce him in one quick second. Before I get to that, I would like to introduce those of you who are joining us today for the first time to the platform. So today, you are entitled, and we hope that you engage with us as much as you can. We have a lot of people registered and a lot of people joining in as we speak. The questions are live. You can upvote these questions, and we will be engaging with you throughout the presentation, as more so in the end. We also ask that you fill out our polls so that we can have a better idea of who's attending, where you are, and how we can address some of your concerns through the insights that will be shared today. Following this webinar, everyone will receive a recording and have access to the document. Before we do send it out, we will go through the relevant compliance teams to make sure that we can send out everything that was shared. But that's usually sent out before the end of this week. You'll have access to everything that is shared and discussed today. So with that, it's my honor and privilege to welcome Reiner, the managing partner of Constellation. He's the founder and, as I've said, managing partner, focusing on MBO and buy and build situations in German asset-light industries. He works closely with entrepreneurs, and before this, he was head of corporate development and senior executive in various businesses at Daimler and Bertelsmann AG. He began his career at McKinsey & Co. in Switzerland, where he led various strategic and operational studies. So I will now turn the time over to Reiner to welcome some of our other fantastic speakers who have joined us today to discuss value creation strategies and how we can defend against economic crisis. Reiner, the virtual floor is now yours. Thank you for joining us and for taking the time to be with us today.
Jason, thank you very much. Also, thank you for the very good introduction. I hope Thomas and Bertram can make their own introduction. I know they have a very, very exciting background, and particularly in these times where times are crazier than ever, are happy to have people with a seasoned background about crisis. May I ask Thomas first to introduce himself? Good to have you, Thomas, and give us a short summary for yourself, and Bertram, of course, afterwards as well. I hope Thomas has heard me. If not, let me ask Bertram first, and then we might fix this with Thomas. Technology is always a challenge, we know that, independent of time. Bertram, please, you first now.
Yeah, thanks, Reiner. Yeah, my name is Bertram Schütz. I'm working for CAPSA, which is a pan-European private equity and asset manager. So we are doing both private equity and also private debt. Have about 3.5 billion euros under management. I've been with CAPSA for almost 3 years now. Before that, I spent about 10 years and also through the last crisis with Avenue Capital, which is, of course, a combined kind of distressed and also a direct lending house. And before that, I spent almost 20 years in banking. And the last position I had was head of portfolio management at UniCredit, so the kind of global bank with Italian roots. and where I oversaw everything that was acquisition and acquisition finance and LBO related financings.
Exciting. Thank you very much. We wait for Thomas when he shows up again. Obviously, he's working on it. But I have a question, Jason, to you. I see a lot of people follow us now. I wanted to welcome them. Do you know how many they are?
Yes. So far we have around 198 watching. We see that number growing as we speak.
Yeah, and I see I see partners, independents, even students, and I take the chance to welcome all of them to be curious enough to join this event. I give you a big heads up because there is a saying in private equity that only a partner who has gone through a crisis is a valid principal or partner in private equity. Now there you are. All of you who are now with us listening to this will experience one of the most important crises in economy worldwide, and it's something exceptional, and we have to take it from the positive side. What can we do to be better? And I'm very happy again to have with me Bertram and Thomas. And I think Thomas is now hearing me. Thomas, can you hear me?
Yes, I hear very well. Sorry, I don't know. So a message told me that someone else was already using my credentials, so maybe we are two of us.
So, but I know you have a long time with Apax, and it's very exciting to hear shortly your way, how you came to Apax. I actually almost ended with Apax with Martin Halusa myself. Quite something we can share later. But give us your background so everybody knows, please.
Excellent. I've been with Apax for now nearly 20 years, so joined 2001. You said before that you become a principal, a true principal, once you've been through crisis. So it's my third time. Not looking forward to it, but this is my third time. Specialized in TMT, mostly telecoms and technology investments, leading this practice for Apax partners in France. And before that, I was working with the Boston Consulting Group in Paris in the US, also mostly in the telecom sector.
Excellent. Thanks a lot. Yeah. Well, we see that if you had 3 quizzes, you are triple in that qualification. Obviously, we all had our experiences, but I think for the audience, it's important that we share them. And as I understand, Jason, you will be moderating and sorting the questions. So I don't want to come with the wrong question at the wrong time. And then I take over for the moderation of the discussion. Okay, Jason.
Perfect. So let's start, I think, with the overall question, if we can move on to the first slide that we have. There you go. So I think the first question here to all of those speaking today is, were private equity portfolios better prepared for COVID-19 and the current economic crisis that we're getting into, because the consensus was that we were on a cyclical high pre-corona? How do you gentlemen feel about that?
Well, it's a good question. Bertram, you want to start?
Yeah, sure. I think definitely everybody prepared its various portfolios already for a recession to come. I think that was at least what also our understanding from our various kind of peers were in the market over the last 2 to 3 years. I think ultimately, of course, nobody looked for the black swan that has appeared with the coronavirus. And what we feel is that we are not yet really in a recessionary environment. We are still kind of in some countries on lockdown mode. So more in a freeze, so to speak, and then expect the recession really to unfold with unemployment numbers now going up, and also people, especially companies, now looking also for more permanent reduction of workforce. I think that's something where we are pretty much alerted to. So I think that, like I said, everybody has prepared for it, but I think the actual trigger point, of course, would have been probably located somewhere completely other than what we've all experienced now.
And maybe particularly true, and we come back to that, is the speed, how it happened. You know, in past crises, we had some of these events as well, but this time it came all of a sudden. Well, Thomas, what about you? What's your view about this cyclicality and preparedness on such a crisis?
I think I would join you saying that we were probably better prepared, because at least when you go through different crises, you learn one after the other. And the industry, I think, in general, is much more now ready for that kind of moment. I would say as you said, it's very hard to predict when a cycle is going to end. You have signs. You can say, okay, it's been years that is going up, so the cycle will end up at one point. But I would say it's very hard to predict. So the best way to be prepared is to be always prepared. And I think what I would say is, in the way you pick up the sectors you choose to invest in, the kind of companies you invest in, the fact that you try to diversify risk and so on, makes that your portfolio is always, I would say, ready for a crisis, because you will never really guess when it's going to happen.
I would agree on that point. Absolutely. I think from the beginning, when you do your choices of equity, you should think about the next crisis. Interesting enough, we all were aware there will be a next downturn, but I don't think anybody believed that downturn will be worse than anything before. Interesting also how fast it went down and how the stock market recovered rather quickly. What do you think about that, Bertram? Is this lasting or not lasting?
Well, because if I knew that, probably I wouldn't be doing my job anymore. No, jokes aside, I think it's very interesting, and also the magnitude, of course, and I echo what has been said before, because in the last crisis, at least 2007, 2009, you had a year and a half to 2 years in the making, and then also it took quite a while to get back in terms of markets or equity markets afterwards. And I don't know, I think it's maybe also a different environment to last time, given that we've got really zero interest environment and nobody really knows where to kind of keep his cash, so to speak, and with some shares in your portfolio, at least you can be more optimistic than just keeping kind of cash, which will go down in value once inflation will hit you later down in the kind of throughout the crisis, I would say.
And we have to be fair to say that never ever before governments have acted so quickly and so rigorously against the potential crisis, which certainly helped at the time being, but that's at the time being. What will be next? Thomas, what do you think? Will it help sustainable, or will it be a short moment and then it comes back?
To be honest, I don't know. What I would like to say is that when you talk about the markets, you have to, I would say, differentiate a little bit, because of course the index can move back and go back, but I think you have to really look into the different behavior of the different kind of stocks and different sectors. Even in the sector, you may have some stocks that move differently from one to the other. If I look at my sector, which is telecom and tech, you can see that many companies now, many stocks are already well above the price. The price. Yeah, in December last year, which was already very high. And so I would say depending on the sectors, the rebound is strong or not. And even in one sector, you can see that with a crisis, you need to be more geared towards stock picking than, index investing. And so I think, okay, you have a rebound in the portfolio, but you have to look really who is rebounding and who is not. And I think that's a virtue, if you can find something virtual in crisis, is that it's forced to differentiate a little bit and not only bet on an asset class on an index. I think that's what I can see from my small window in the TMT space. What's going to be next? I think I would fully agree on the fact that the measures taken by the governments have been so huge and so fast that it helps surely in the short and maybe medium term. But at least what is crazy with this crisis, if I may say so, is that there is a lot of uncertainty because you have a third party involved, which is this virus. And so everybody is waiting to see, do we have this famous second wave or not? And actually, it does not really depend on something that you can action it yourself, I would say. So I don't know for the moment.
If we go back, and I think it's always good to look back in former crises. If you remember well, the crisis 2000, 2002, mainly 2001, telecom was a disaster. Now this time, telecom is most protected. If we go 2008, 9, it was financial industry, was absolutely down. So what is interesting this time, it's not about one single industry that goes down. It's more like very selective industries that go up, and many go down, and maybe go further down in the near future. So now, Bert, from your side, what industry would you now invest? And maybe if you can say, what did you invest in the last couple of months or even years in the perspective of crisis?
Yeah, I think we kind of traditionally, since over the last 15 years or so, that the business or that the company Capsa has been in existence, we always tried to focus on businesses that were less to non-cyclical, I would say. So we were maybe slightly ahead of the curve, if you may, in terms of what is happening in the stock markets currently. So what we try to pick is people, in the tech space, software space, food-related, healthcare-related companies, which typically then make up about 2/3 on B2B services as well, make 2/3 of our portfolios. And that is also one lesson that we draw from the last crisis, is that portfolios like that typically come through the crisis pretty well. You have to make sure, I think, as everybody else has done as well, that there is sufficient liquidity in the underlying portfolio companies to really also be able to have a nice pickup in working capital if required, getting out of the crisis or getting out of the freeze as currently. I think that's the most important bit. And then also, of course, have management available that hopefully also has some experience from the last crisis, or if not, really has also kind of additional kind of advice available that helps them kind of benefiting also from that knowledge that's also in our kind of management company available.
Obviously, that I think is very important to say. The management of each business is important to be experienced in this situation. Thomas, what about you? Investments you did and you have in mind that should be less damaged by the COVID-19?
I think for the moment, as you say, we are at the beginning of the crisis, and time will tell, but I think our portfolio is resisting pretty well, extremely well. Some of our companies are still growing. Some of our companies confirmed the 2020 budget. It's based maybe on the sector selection, so we have quite some technology and telecom companies in our portfolio nowadays. But I would say it's also linked to the companies you picked up and the management you picked up. And I think you have to be very disciplined in the way you invest, and you have sometimes to stick on the basics of our industry and of our job, which is to have a great management. Is the business based on long-term growth trends, underlying trends? Is it providing a business critical service to its clients? Is the client base strong, and so on? I would say what is true is that after crisis, you say you have to go back to basics, but in fact, you have to stick to basics all the way through. And I would say if you picked up the right sectors and you picked up the right people, which are supposed to be as the investor, stock pickers in a way, you may end up having a stronger portfolio than the average when a crisis comes.
Well, interesting is what you mentioned about cyclicality. We always hear you should avoid cyclical businesses, but what about anti-cyclical businesses that are exactly going with the crisis? And there are some of them. Bertram, what about that? Do you have some, or you see some?
Of course, I mean, we've got one example, for example, where we've got an operator of football patches where kind of inside, so not outside football patches, but inside football patches. And all of them, of course, were closed due to the general lockdown and people couldn't really come. But we feel that's something, once again, where you can also just sit back and wait, so to speak, and just wait for the business to come back. More or less to the same magnitude as before, after some time, of course. I think it's businesses like this where you of course, nobody, I think, in our universe at least, was anticipating that such a complete lockdown would happen. And there is a difference between a lockdown, so really stopping a business for 2 to 3 months, rather than really having a recessionary environment where maybe turnover goes down a little bit or even maybe a little bit more, and you can take much more actions. I think here you can just really try to get the business ready for the restart, help management keep liquidity in check and so forth. I think so that's a completely different mindset and also different kind of techniques required than in a usual kind of recessionary environment.
Okay, just from my side, we invested in 2011 into a company educating unemployed, and we sold it in 2015. There was no crisis, so not many unemployed, but we were resilient. We actually invested again just this year in January 24th. We signed a group of education companies doing employment facilitation for unemployed people. At the time we bought it, the due diligence said, unfortunately, there are not enough unemployed people currently, so the real potential is not there. And you see how quickly that can change. So we have to be ready always for these kind of unforeseen events. But obviously nobody foresaw this event. It might be a bit of luck that it just happened now in that sense. And unfortunately for others, it's no luck at all. And we have to be anticipating all of them, of course. So we heard about there is ways you can prepare against COVID-19 or any of these kind of events. But you mentioned also, and both mentioned what else is important to prepare. Bertram, you mentioned the management. Thomas, what about your management that you have in your portfolio company? How you prepare them for this kind of situation?
I think we invest mostly in companies which are still led by founders or people who really build up the company. So they are by definition people who know to survive in very difficult environment. So I think you have to provide them support in various dimensions, and I'm sure you will talk about this, but you know, the management are true entrepreneurs, and we have to be sure that we are backing them, providing the tools in terms of digital transformation, the way to international business, the right reporting tools and management systems. I would say everything which is around ESG policy and so on. So that's how we do. I think we really pick up management that we think are able to conduct the company in such difficult times. So it's part of the selection of the company. Sorry.
Yeah, excuse me. How do you interact with these companies? I hear you have very seasoned, experienced managers, even former owners, entrepreneurs in them. But how do you work with them? In what way?
We have very clear, I would say, tools and processes to help them on various dimensions to create value. I mentioned the digital transformations. I mentioned the internalization of company, the build-up, I would say, to be sure that the reporting and monitoring system are at par. So basically the teams and I would say the cross-functional teams within the organization are providing supports and contacts and resources and experience and benchmark and networks to be sure that all that dimension of the business are correctly and fully implemented during our ownership. So it's you know better than I do. Interacting with management is through boards, through processes, but also I'm sure in those times all of you guys talk to your CEOs of portfolio companies quite recently over the phone, exchanging things and so on. So that's the way you interact. We interact with the management.
Well, even more today, as we have not the possibility to meet with them. Exactly. So conferencing becomes a double challenge. Bertram, what is your experience in running and working with your management teams?
Yeah, I think it's much more active now, I would say, than in normal times. Same as what Thomas just said. So it's not. Normally you would have a monthly board where you can also then kind of discuss on strategic issues or operational issues of the business. Whereas now you really see, I would say, more weekly or bi-weekly direct contact with management, just in order to see how they are doing, if there's anything that has really popped up, which was kind of not expected. So to make sure that the overall kind of company direction is more or less unchanged, and also ready really for, like I said, for the next step, be it really then the reopening of the business or whatever is kind of the next thing that is kind of relevant here.
I think a very important point is speed. You know, in these days, a lockdown is a decision, a political decision from one to the other moment. It's in an hour or so, it becomes known. How can you make an organization of maybe hundreds or even thousands react quickly to this? Are they doing it themselves, or are they waiting for your instructions as the owner?
No, I think typically, at least in our cases, we really have management teams that like Thomas was saying earlier, are really used to kind of operate the business from their perspective. And of course, you give them directions, but I think there is really no need for a kind of day-to-day involvement into the business, and that would also not be possible just for kind of legal and governance reasons anyhow. So I think you need to have a strong management in place, and then they will also sort out, I think, most of the issues that really can come up.
And Rainer, we actually have a question from the audience about something similar to this. If I could ask it to the three of you, that Karsten asked, how do you assess your current portfolio by performance and improvement opportunity? How do you understand where to focus the effort of your CXOs and time, given the current situation that we're in?
I think that's a very valid question, particularly if you have a portfolio of dozens of companies. Well, Thomas, you're having that situation, I guess. What are you doing in focusing and selecting priorities over a couple of portfolio companies?
I think first, we have quite a limited number of companies in our portfolio. So we have around 15 companies, all funds, I would say, together. And it's a choice. It's because it's, especially in those moments, you need to be able to devote enough time to the. So if you have a too wide portfolio, it's becoming more difficult to devote the right amount of time to each of those. As you said, for the moment, we've been pretty lucky because a very limited number of companies are really suffering from the beginning of this crisis. And so basically the partners and the team in charge are fully involved to help the management if they need it. I would say also that the activity on the investment side is getting lower. So it allows you to devote more time on your portfolio companies. And I think what is important is that the value creation process, at least within a firm, is very processed. And so basically, you don't wait for that kind of moment happening to be involved with the management to implement value creation and to improve the operation of the company. You'll start at day one, often between signing and closing, starting to think about those things, and you just have the plan. What you just said is right, is that speed is of the essence, and then you have to maybe refocus and prioritize a little bit. So it's like in every recession, you have to make sure that your cash situation is healthy. You have to be sure that your balance sheet is healthy. You have to be sure that everywhere in the company you can actionate and operate very quickly. So the governance has to be very appropriate. And so basically you spend the beginning of the recession, like always the first few weeks, you need to be sure that the house is in order to go through the storm, that everything is prepared. And then I would say now a lot of our portfolio companies are already focusing on the next phase. What that means for our business? What do we have to assist or to change our offering? Do we have to be more aggressive on build-ups? Do we have to change the way we work? A lot of companies are already, I would say, in the thinking what this crisis means for the longer term. So that's where we are. And there.
I wonder about Bertram's portfolio. How big is it? And is it similar? No problem. Luckily, more telco or others. What is your situation?
No, I think it's about 20 odd companies in our private equity portfolio currently. And there is, I mean, in general, of course, what we tend to do is we tend not to over leverage businesses once we get in. So normally businesses have between 2.5 and 3 turns of leverage. So not really kind of an awful lot. Also to be sure that in case of problems or recessionary environment that we discussed earlier, that there is not kind of additional pressure on management to really have very detailed discussions also with their financing partners. What we've done is basically more or less, or what we've been doing is more or less the same that Thomas was mentioning earlier as well. I think our focus is also not necessarily only on the ones that do have issues, but also on the ones maybe that are even that have better performance than anticipated, which could then also require additional working capital needs that we might not have factored into the business plan in day one. So, for example, we've got one business that is involved in the wholesale activities of masks, which are, of course, now in high demand. And that business, of course, that has even fortunately or unfortunately benefited it to a great extent from the current situation, and actually needs much more working capital than it would orderly do for that part of the business. So there's also, I think, some you have to be very careful not only to concentrate really on your, call it, problem children, but really also on the ones that are performing strongly.
So let me make a summary here to that answer, which obviously was a very complex and important question. The answer is, first of all, be happy to have made the right choices from the beginning, what equity you have chosen and invested. So if you have all these invested in the wrong side, like maybe oil industry, whatever, then you have a tough time now. Second, you need a good team. You need a good team in your asset management team, and you need a good team running each company. If the team is experienced, they know how to do, and they can be much faster than if they have to wait for the next board meeting to make a decision. And the third thing I hear from both of you, Thomas and Bertram, is you need liquidity. You have to be not on the limit. If you are the limit in that situation, you might be kicked out from the market and the competitors will win. So I think that's an important addition to the question. But yeah, I heard your liquidity is defined by a leverage by maximum 3. Bertram, is that right?
Yes, that's correct.
Thomas, is it similar for you?
I don't speak in average there, because you have very different kind of businesses within our portfolio. But I would say generally, our experience and our will is that the value creation is driven by growth, EBITDA growth, and the leverage is not really I would say, the main tool to create value. It's important, of course, but it's not the one we're pushing very hard. And I would say, basically, in leverage, the last mile you take, the risk is very high and the return is very limited. So we always tend to be very conservative on this.
I would share that. Yeah.
I think maybe another one, which is probably also coming back to what you just mentioned, Rainer, on oil and gas, or I think it's something that hasn't been mentioned before. It's also kind of we are fully compliant with ESG criteria. I think same as Apex is doing as well, I guess. And also, if you really truly believe in that scheme and believe in investing in sustainable businesses, I think that also is something that probably throughout the crisis and afterwards will become even more important. And I mean, you've seen all the articles about people thinking about, is peak oil now behind us, yes or no? And what does it actually mean? And can we go more towards new renewables and also taking more consideration to the environment and so forth? I think that might also be a trend that will evolve and become much more prevalent post-COVID-19.
Are you compromising on ESG while in the crisis or not?
From our ends, not. No, if anything, we are putting more pressure on it or really more stressing it, even, like I said earlier. So it's...
Okay. What about Thomas? Is this an issue? Maybe we lost connection to Thomas. Bertram, do you still hear me? Jason, can you hear me?
I can hear you. Yeah.
Okay, excellent.
Here, I think Thomas is back.
Okay, cool. Thomas, the question was about ESG. And obviously, let's face it, we are fighting, and not all, but some companies fight for survival. Where you put ESG in a time when the company is not safe to survive and has enough cash until the Corona crisis is over?
I think ESG is, is a long-term things you have to implement within your company. I would say it's a general underlying policy. It's not affected by what happens in the crisis right now.
I would agree. On the other side, we talked a lot about the risk. We talked about a lot of threats. I feel there are a lot of opportunities around at the same time. We have a certain shakeout. The weaker companies go out of business, and there will be a less competing landscape, maybe few less stronger players. What about this in your markets? Bertram, first.
I don't unfortunately share your view there. Right on the contrary, because if you see what the governments are doing, yes, they've been very active and very quickly pouring really millions and billions of euros onto companies. And what we see, at least here in Germany, is that there's quite a few companies that had an awful lot of issues with their business models for quite a while, and are now actually saved by the COVID-19, which seems to be a little bit counterintuitively. But I think there is really more focus from politicians and KfW here, the kind of state bank, to really save businesses before actually looking too detailed into the business model. And there is not very many companies like Mr. Spohr, for example, from Lufthansa, who publicly admits and says, look, we have to come out of this crisis as a completely smaller airline than before, because there will be just less demand for quite a while for our product, our service that we offer. But most of them, others on the retail side and so forth, I think there is really, it's not necessarily that will happen, unfortunately, I guess.
So you don't see many taking advantage of a shakeout of competition. You see more like everybody will have to bake smaller cakes.
To some extent, it really then depends. Okay, once again, what Thomas alluded to earlier as well. Of course, depending on the sector and where you are, but there is really like there's an awful lot of money going into sectors which we as a company, and I'm personally also would not invest in, with my own money, and but with the public money that's still doable. So I think there's also some kind of disconnect with what is of course required, also maybe to keep quite a few employees and employment at a higher level, but then also to support maybe sectors or industries that should rather not be supported going forward.
Okay. Thomas, any comment on that?
I think it will all depend on the length and the depth of the crisis. I mean, if it's just, like a lockdown and a shutdown for 2, 3, 4 months, and then you have money poured by the banks, by the governments to sustain some businesses and so on, I mean, it will be a different story than if it remains longer, because at one point, there are limits to the help you can provide to ailing companies in the long term. So I think, as a rule, we always try to invest in leaders, because we know that through the crisis, leaders come out stronger. And so I'm sure that even if the crisis nowadays doesn't last very long, I think it will as always turn to be, I would say, more favorable for the leaders. So, we'll see, depending on the length, to what extent it will be like this, but I'm sure it will. Another very positive effect is not only on, I would say, companies that have difficulties, but I would say all the build-ups you want to do from acquiring, smaller companies to consolidate a business or a market. I think a lot of entrepreneurs that that have been only knowing growth. They've seen like their work for what they've been working for the last 10 years that was maybe close to disappear at one point, and so they're probably more open to consolidation than they were before.
I would very much agree on that side. That means the buy and build process can even be accelerated in these crisis times than in the boom time.
I think that's, I would agree on that.
Yeah. Actually, we are currently in exactly buy and build the negotiations. They are much easier now than they were 12 months ago or 6 months ago. The good question is, what are the investors doing actually? Are they involving themselves? Is additional reports requested? Are they a pain in the neck? What is your experience, Bertram, on that?
I mean, we always, as a kind of a general policy, try to be very transparent in what we do and also kind of in our investments. And what we've initiated is also a kind of bi-weekly special reporting on COVID-19, where we go really in detail into every single kind of portfolio company and give an update to our investors, both in kind of written format and then as a report. And then there's also kind of update calls where we specifically then are available to answer additional questions on that, also to enable those investors, which typically then also are kind of managing money, maybe also for third parties, to do their respective reporting and also be always on top of things.
Thomas, what about your side, Apax?
I fully agree on what you just said before. I think at the end of the day, the investors, we're managing their money. They are the owners of the assets, and we've always been very transparent. I think nowadays you have to be maybe I would say more often in contact. So, for example, for the beginning of the crisis, every week we were providing them with very extensive report on our portfolio companies, selecting 3 portfolio companies every week, and then providing what is the impact of the crisis, what the company is doing, what we see next, and so on. And so trying to be very responsive and on a real-time basis providing information. The reality is the investors, they have so many companies in the portfolio that they want to see where are the problems, where are they not the problems. And so once they have the feeling that some of your companies are well and so on, they tend to focus maybe more on the problems than on the one that are doing well. But I think in those times you have to be very responsive and maybe in tighter relations than in usual time, and it's fully normal. You can understand that from that point of view, and we understand it.
More than ever, and it will be appreciated from the investor side if you do so, right? Jason, before I make a summary, is there any more question from others coming in?
There's actually one that's very close to this one that you've just asked, which is what are on top of the conversations that you've been having with your LPs. This is from Kiri Yanakis. What are their main concerns? So what is it that they're mainly concerned with? And I think a summary would be great, and we can move into a few more of the questions from the audience. But I think this just ties very well into what we've been discussing here now. So what are some of the LP's main concerns that you've seen?
I pass this again to Bertram first, and then obviously to Thomas. I think this is something we all have in ourselves to handle. Bertram, what is your main concern at this moment of time?
Well, I think the investors, their main concern is, of course, that nobody really knows kind of what is the shape of the comeback, so to speak. Now, will it be really V-shaped? Will it be U-shaped? Will it be like a swash shape, like the Nike swash or whatever? So I think it's very difficult. Of course, if you take the stock markets, you would think it should be V-shaped and pretty quickly back up. From experience, also from the last crisis and the crisis before, I would guess that might take longer than people think. That's something where I think also some of the management teams, of course, are trying to figure out what really the trend in it's really coming back or being back to normal, or what is actually the new normal, as most of the people now refer to. I think that's the biggest question mark, of course.
So that's your side. Now, Thomas, you said that your business by part have even come back to levels like before the crisis in telco, but no surprise. What are your concerns anyway? So even if that is looking better than in other sectors?
I think, and with that to what Bertrand just said before, I think you have to be sure that you don't miss any fundamental change in the market post-crisis. And so you have to be sure you carefully think about what's next. And I would say the risk is to be too focused on the short term and not thinking, forward. What does it mean longer term in terms of value creation for the portfolio company? Once I would say the urgency is a little bit behind us, and I can see it. I mean, you were talking about telecoms. We have some companies doing B2B telecoms based in the cloud. You can see that the behavior of your clients will change probably much faster. Now they've all experienced live what it means to what remote working is meaning. And so you have to be sure that you understand what you need to change in the coming days in a positive manner, I would say, in your offering, in the way you sell, in the way you work, to be sure that you don't miss the next phase. I think that's what is really important.
So not missing opportunities is an obvious concern, and there will be a change in the game, and depending not only on the strongest, but also the smartest in the market. I agree. Maybe from my side, we not only have invested in this education of non-employed people, but also we have invested in e-bikes, the e-mobility. And it's quite interesting to see what e-bikes have as a role at the lockdown. A bike is officially allowed to transport while public transport is not allowed anymore. So we had an unexpected boom for e-bikes from people normally going on public transport. Whether that remains or not may be another question. But interesting is that there are events through the crisis that it's not for sure, they can change the game. Is there more questions upcoming, Jason?
Yes, we have quite a few from the audience. Do you want me to ask a couple of the ones that have been voted by most of those attending? We have some top voted questions here. This one's from George Love. He asks, coming out of this crisis, how do you think PE's behavior will change across strategy, deal making, and portfolio management processes? For instance, how we consider portfolio diversification, extent of due diligence, and portfolio value creation approaches?
That's a very good question. Well, Thomas, may I ask you to start?
Yeah, if I want to be a little bit, I would say that's what you should do all the time. Mm-hmm. I mean, it's you need to diversify your portfolio. You do to manage the risk. You need to be sure that you have a strong value creation process within your firm to create value within your portfolio. I think it was driven just by the increase in the average multiple you buy the businesses, and so to still deliver the returns you have to provide to your investors, you work more and more to get to improve the quality of the investment you made. So I think there is a general trend within the industry, which is we are, I think, as an industry, the industry is more and more precise on what it's doing, more and more professional, I may say, in what we're doing, more and more focused in what we're doing. And this is, the crisis accelerate maybe this need, but this is something which is a longer term trend, I would say. So for me, the risk is to think, a little bit cyclically in the way you work is, everything works, so I do everything. And then now it's the crisis, so I have to be disciplined. No, you have to be disciplined all the way through. And I would say after years in this business, you realize sometimes it's just about being disciplined and being focused on the key points and the key lessons you learned from the years you've been working in this industry. And sometimes it's more difficult when there is euphoria everywhere around and everything works, but that's where you need to be still be focused and disciplined, because you know that's what's going to pay off in the long term.
Thank you. Bertram, anything to add to this?
I think that was already pretty vast. I think the only thing that I would add is that maybe also in terms of target industries, there might be some shifts due to what we just mentioned earlier, kind of be it ESG or be it just also like performance through COVID-19 and post that through the recessionary environment, so that people, or I would say also quite a few private equity firms would probably focus much more on the kind of sectors that performed well, rather than concentrating maybe on some of the other sectors that have performed not so well.
I think that's very, very, very worthwhile. You mentioned, and I think it's the answer, Jason, to that question is not a one-sentence answer. I like to take the opportunity here to summarize a bit what we have talked in the last 50 minutes. First, the choice of equity should not be in the moment, but it should be on a long term, and you should be resistant to crisis as much as you can. That's not easy, but the choice of equity is the first step. And we mentioned non-cyclical equity, and I would add anti-cyclical, if ever, because if you have a portfolio, at least some of your investments should be anti-cyclical to the cyclic ones. A further point was liquidity or leverage. We understand that leverage is nice in good times. It can be extremely dangerous in crisis time. We will definitely see over-leveraged business getting out of the market because they cannot sustain their financing. But a very important point now when we come to the operating teams, which is core of value generation, is your teams, you better make sure have a crisis experience. It's the same like in the GPs, you should have principals and partners having this experience, the same in the teams. Seasoned teams will act more decisively in crisis. I can give an example in our bike business. The day that the federal government decided to lock down all shops, at the same day they had Kurzarbeit announced, so they knew that will come, and they continue to have repair shops, and the repair shops continue to sell, which was quite nice, by the way. But it is extremely fast, and you don't get this by a board. You need a very seasoned management team that can act as quickly as that to react on such situations. And that brings me to the leadership. I think your teams should be strong leaders as well. It should not be us as the GPs, as the advisors. It should be them acting operatingly rapid and decisively. I would like, and please interrupt me if anything I missed, we also talked about defensive strategies. We should be careful on these strategies that over leverage or they take too much risks. Anything can happen at any moment of time. On the other side, yes, we should take opportunities. And one opportunity is the buy and build process, which goes much smoother in these times when the owners, the entrepreneurs, humbly realize that their life work, or at least 10-year work, could fail just by one crisis, and maybe it's better to combine with another stronger partner before. We actually practice that the owners of these businesses stay with us in the boards, eventually in the management, but they are combining forces with other entrepreneurs in the combined companies. And we talked about the investors should be always involved. They should feel well with what we are doing in the times of crisis more than ever, because they are concerned about the funds they have given. They trusted us, and we have to be carefully giving them regular reports about the developments. And finally, I would add, I think this time is also time of learning, and we must be very humble accepting we don't know all of this. We understood that we don't know it's a V curve, a U curve, a L curve, a Nike curve. We only know the coronavirus looked like a very tiny virus at the beginning. If you remember in January, it has completely changed the world. So it can come back, there can be a second wave, and we have to be very careful observing whether this happens, which could be having disastrous impacts to any business, including the governments. So with other words, learning is important here, and those younger ones in the audience, they should feel privileged to learn fast. A lot now they will have to use this many years after. That would be my summary, and I really thank to Thomas and Bertram because they have been through crisis obviously before, as I did, and it helped us each time to become more humble and more careful in making decisions. Jason, that's my first summary, please.
Fantastic. Thank you. Thank you so much, Rainer. Thank you, Bertram, and thank you, Thomas, for taking the time to participate today and to share your insights. We really appreciate it. I think, one of the things that was mentioned, we have a little bit of time before we end here. There's one last question that I thought was quite interesting, which is, and you've mentioned this a bit about buy and build and the strategy there, but what are the biggest challenges, asked by Karsten Bolvig, what are the biggest challenges in integrating recent buy and build acquisitions? And then I think once we've answered this, we can end on that note.
I pass it first to Bertram. I don't know how much buy and build you have in mind right now. If you want to have a second of thought, then I tell you we are in the middle of buy and build processes exactly right now. And we were positively surprised by the openness of banks in financing. Our normal leverage is 50%, which is reasonable. Our normal covenants is close to 0. We don't like covenants. In crisis, you are very happy if you are not going for too much covenants. What we feel on this side, there's a good support on financing, which is not evident in these times. On the other side, and I repeat myself, the entrepreneurs who are considering selling the business to add on to a larger group, they are more careful in negotiations to make sure they don't mess up the relationship and the deal, because they see how much risk on the one side, they counterweight the opportunity they can continue in the future. I must mention there that we normally invite those who sell us the businesses in a buy and build process to participate in the combined company. So we keep their knowledge, we keep them on the board or even on the management, and we make sure that they have a perspective of another reparticipation. I took this long because Bertram, I like you have enough time to give your answer, and obviously Thomas at the end, please.
I think it's from our end, it's pretty similar. No, what we tend to do is really arrange for financings, kind of committed or uncommitted financings for acquisitions in buy and build situations from day one, so that we are in a situation once we find a target to renegotiate or look for financing again. That's something that we might do a little bit differently. And what we see is also, it just works more all through in times of crisis. There is, of course, less physical presence, and sometimes that could be a pretty big obstacle. Just doing meetings through videos, physical meetings up until very recently. Now it's possible again, but I think that's, of course, an additional hurdle, so to speak, here in the current situation.
Good point. I didn't mention it's tougher to negotiate by video than by person. That's a handicap we have today, which we have to overcome. Thomas, what about your view on this?
My view on the buy and build strategy is twofold. I would say you have to adapt to the present time in a way. So I think the process is you have to play it a little bit differently for very basic reasons. The one you mentioned. It's very hard to make management presentations and to meet and to feel if it's going to work between the people, the alchemy between the people through video conferencing. So this is a detail, but this is a thing. So you have to adapt to the situation. Of course, on the price, and you have to admit on the fact that the year 2020 is not always easy to plan and to forecast. So, and you have to take that into account in the way you deal with, because otherwise the investors would tell you, guys, the world is different. Why don't you do it differently? Why don't you take into account the fact that the world may be different tomorrow? So this is something you need to do, and which is not always easy, because the you want to acquire maybe does not suffer from the crisis. The management doesn't have, they say, guys, my business is doing very well, so what I should take into account something which is external to my stuff. So that's I would say on the short term, you need to adapt that. It may be the price, it may be the process, and so on and so on. But I would say on the other hand, you have to stick to the basics, mean that, and for me, two things are very important always is the cultural fit, and I would say what I call the management and governance concept. Meaning the technical integration of things and so on, you can do it, you can deal with it, your personnel can deal with it. But you have to be sure that the governance of the company going forward and the management concept, I would say the way the two management would be articulated is efficient and geared toward the value creation plan you had in mind. So that would be my answer to your questions, and I fully subscribe, of course, to everything that has been said before me.
And I would like to add a very special remark just to that, what you just said. Interesting, earnouts are very unpopular on seller sides, except in these times, because nobody knows where the EBITDA will end. And by earnout, they have their own upside potential. Obviously, the earnout should go both directions. And it's fair to the seller that if he's doing well in the crisis, he should get a reward on the purchasing price. Thank you for that. Jason, up to you. Is there one more question you want to get in?
I think that was general. Thank you so much for your time. I think we've taken up a minute more than we had promised you and the audience. So we appreciate for the time that you've spent with us. Thank you so much for joining us today, and thank you to everyone who attended. We look forward to having you all with us again in our future webinars. Thank you so much. Have a great rest of the afternoon. Bye-bye. We'll see you again. See you, Rainer, Bertram, and Thomas. Thank you very much. It's great having you.
It was a pleasure. Thank you a lot. All the best. Thank you.
Bye-bye.
Bye.